Welcome to the MUFG Global Markets Asia podcast. I'm Lloyd Chan, Senior Currency Analyst with the MUFG Global Markets Asia Research Team. The following podcast is for informational purposes only. It is intended for professional investors and eligible counterparties and not for retail clients. Any content should not be regarded as an offer to conduct investment businesses or investment recommendations. For this episode, we take a look at Indonesia's monetary and fiscal policies, including the outlook for the Rupiah after Bank Indonesia Policy meeting and the annual Jackson Hole Symposium last week. The big picture is that the Fed will cut interest rates in September, and US Treasury yields are already falling. Pressures are easing on the Rupiah, oil prices are falling as well, and the tide is turning for the Rupiah. Fed Chair Powell had made it clear that the time has come for a policy adjustment and had confirmed a rate cut at the September meeting. On the other hand, he also mentioned that they would do everything to support the strong labour market. Compared to his Jackson Hole statements with his latest FOMC meeting, his stance has appeared to be more dovish. But whether it will be a 25 or 50 basis points cut in September, this will be left to how employment is doing. There will be jobs data at the start of September. Nonetheless, regardless of the magnitude of the rate cut, US dollar weakness could persist. And we have seen the Rupiah has had a good run since the start of the second half of 2024. If we look at the equity index, it is up by 4% this year to trade at a record high of more than 7,500. The same story on the 10-year government bond, with yields falling to 6.6% from 7.2% at one point. And of course, the Rupiah is up by more than 5% against the US dollar since the start of the second half of this year. Bank Indonesia has been pivotal. Apart from intervention, the introduction of Rupiah securities has been successful in attracting foreign investors. SRBI has grown in size to about $55 billion in July, from less than $5 billion at the start. Foreigners now hold 27% of SRBI, up from 7% when it was first launched in September 2023. And in dollar terms, foreigners hold about $15 billion of SRBI today. We think policy rates should go lower from here, and there could be a window of opportunity in November or December for Bank Indonesia to cut interest rates. But BI can still afford to be patient and wait for the Fed to cut first before considering doing the same. Domestic credit growth was still strong in July, while policymakers remain concerned about global risk, especially with the US elections coming up. So, unlike the Philippines, there is no rush for the BI to front-run the Fed in cutting interest rates. But it is not just about global risks. Domestic risks are something to watch for as well. At one point, the Rupiah sold off last week due to street protests against the parliament's decision to change election law to make way for President Jokowi's youngest son to run for the 27 November election. This shows how sensitive the Rupiah can be to risk events. The good news is that the parliament quickly reversed their decision to avoid making the situation worse. In terms of the fiscal outlook, this is also something to watch for under new President Prabowo. Not too long ago, news reports about Prabowo's potential plans to widen the budget deficit and push up government debt to GDP ratio to about 50% over the next 5 years have caused quite a stir, with the Rupiah falling sharply. But assurance by Prabowo that he will stick to the budget deficit ceiling of 3% of GDP has helped reduce market concerns. Nonetheless, we know that the free nutritious meal program is a key priority for the next government. But there is a clear budget constraint as well. The program could cost up to 400 to 450 trillion rupiah, and implementing it in full will be negative for government finances. The good news is that the free meal program will be carried out in stages as far as we understand, and a 2.5% budget deficit has also been proposed for 2025. This suggests that the government will remain prudent in spending, and markets like what they are seeing right now. However, a concern for us is that the revenue projections for 2025 seem to be optimistic, especially with commodity prices still low. The government will likely also have to take on more debt to finance some of its spending. Interest payment is also not small as a share of spending, and more debt will also mean more bond issuances. This will dampen bond prices and push up bond yields. The government has assumed that the 10-year government bond yield will be at 6.9% to 7.1% in 2025, which it used for its budget planning, versus 6.6% today. If we look at the maturity profile of Indonesia's government bonds, we find that the amount of debt maturing will peak within the next 3 years. The government can try to raise more revenue, such as raising the tax ratio, but expanding the tax base will take time. The other way is to cut back on other spending, maybe on energy subsidies, but this can be quite an unpopular move. So in all, there will still be a fair bit of fiscal challenges to navigate, especially with the free meal program. Technically, dollar IDR is quite oversold at current levels, but of course it can stay this way for quite some time. Momentum currently favors weakness in the US dollar. However, global uncertainties and domestic fiscal challenges under incoming President Prabowo could still prove to be a drag, and Indonesia's current account deficit widened to $3 billion in the second quarter due to higher services trade deficit on Hajj travels. While the rupiah will be supported for now, it is likely to still depreciate over the medium to longer term in our view. What's notable is that the government is also planning its 2025 budget around a dollar IDR exchange rate of 16,100. And if history is of any guide, Fed rate cuts do not always guarantee sustained rupiah strength. We have seen this in the past. The outlook for growth in the US and for the global economy is also an important part of the equation. So in all, lower policy rates, a wider budget deficit, and a weaker rupiah remain our base case in 2025 and beyond. We look for dollar IDR to stabilize at around the 15,000 to 16,000 range going forward. Thank you for listening to the MUFG Global Markets Asia podcast. Rate, review, and subscribe on Apple, Spotify, or wherever you subscribe to your podcast. Contact your MUFG sales representative for more information, and check back again for more insights from the Global Markets Research team.